home to capital markets that are unmatched in terms of the size of our markets, the transparency in it, the depth, the resiliency, as we've seen. And they provide really the fuel that keep the largest economy in the world moving and allow for investment and development and ultimately allow for job growth, because at the end of the day, wages per worker are dependent upon productivity per worker, that's dependent upon investment per worker, and that's dependent upon the capital markets and getting everybody into the capital markets. So it's interesting, the European Commission recently engaged in what they called a call for evidence. And that was a request that to the public for feedback on interactions, inconsistencies, and gaps and unintended consequences created by Europe's regulatory framework, created by their bureaucracy. And I was going to ask, and maybe of Mr. Toomey, should U.S. regulators engage in a similar project as the EU's call for evidence, and maybe ask what the benefits would be of such an undertaking?
Yeah, thank you. And I think, as we mentioned in our opening remarks, the European Commission effort and the call for evidence, it provides a framework for doing this cumulative analysis on the effects of all these different and overlapping regulations. And we think particularly the parameters that the European Commission outlined, the impact on economic growth, we think is key. Obviously, the interactions and the inconsistencies is key to understand. And I think the ultimate output from a domestic standpoint is understanding how all these disparate rules attacking and addressing different types of risks, whether they're overshooting their policy goals to the detriment ultimately of the economy. So I think basically when we look at the European Commission effort, the parameters they outline are very similar to what we believe should be done, and now's a good time to do it, given that the rules have been in place for some time, or at least some of them have.
Well, I'd also ask Mr. Dees, on the testimony that you submitted, focused on the impact of bank capital and liquidity rules on end users and on corporate treasurers. This argument, less liquidity can mean production comes to a halt. Less liquidity means often that the inventories run low, that the payroll isn't made on time, all of which, of course, harm the people that rely upon these businesses and harm the economy. And I would just ask, what could we do in Congress here to address exactly these concerns?
Congressman, thank you very much for that question. I would say that for you to mandate that the banking regulators undertake an analysis of both the individual effects, but equally as important, the cumulative effects based on their interactions of these different rules as they affect Main Street companies. We made the point and got bipartisan agreement that, for instance, requiring end users to margin their derivative positions with cash, which was a direct dollar-for-dollar diversion from funds that would otherwise be invested to grow inventory, to conduct research and development, to buy new plant and equipment, and otherwise to sustain and, we hope, grow jobs, was something that should be done. And in this Congress, that was done, but the banking regulators have taken steps that put that capital burden instead on the banks, I think, without fully appreciating that in the end, they are intermediaries, and we, the end users and the manufacturing companies of this country, bear those costs.
You know, our chairman of this committee has a firm grasp on history as well as economics. And I would just, Mr. Chairman, quote Aristotle on this: balance in all things that are unbalanced. And my fear here is that we've tipped the scales too much towards bureaucracy. Collective action really is needed at this point, because at the end of the day, bureaucracy can't take all risk and regulate it out of the market. And the facts are that we've got to keep our eye on the main function of the market and drive that job growth. But with that, I'll yield, and I thank you, Mr. Chairman, for your good leadership of this subcommittee.
And I thank the gentleman from California. Moving up north to, gentleman from California has arrived.